let's head down to a 60-minute chart, an hourly time frame here. And again, you can see it breaks that big candle up. Another big inside bar, another inside bar there. Again, another inside bar at our current high as well. So again, going off yesterday's conversation, right? If we're looking at a hold of this structure level, right? And we did hold that neckline. Let's say you're someone that's looking for shorts. This would be that bias inside bar break. So you have the inside bar, right? The one with the IB above it. And again, in your traditional setting, what you would do if an inside bar is if you're aggressive, you'd bracket a buy to the upside. If a buy stop, bracket a sell to the downside, excuse me, with a sell stop. In what we call a bias inside bar break, you're only looking at this in a single direction, right? You're not interested in buying because of your overall analysis of the market. You're only interested in selling. So because of that, you wouldn't have this buy stop on there. So you wouldn't have to worry about kind of getting skunked out. Then following up on what we just spoke about, remember I told you about the fakie? This is a good fake out, again, from the book Street Smarts, right? We fake to the upside, fake the trigger to the upside. In normal circumstances, either you would buy and then you would reverse on the way down, or in this circumstance, you wouldn't buy and then just wait for it to reverse down. And then as you break to the downside, that's a good sign of like a fake breakout, trap the bulls, boom, bears take over, and we push down. Again, Cody said he's looking for 124.80s, the low of our previous news-related spike. So this could be a nice little entry for you right here, aggressively from down here. Actually, I haven't done this in a while. I like using this. Sell stop here. Obviously, a few ways you can do your stops. You can get them above the entire thing, including the mother bar. The mother bar is the green candle next to it, so that would look something like this. Here we go. Or you can do a shorter version just above kind of the inside bar, like that. So good stuff here in the pound. Again, a good example of what we spoke about in the Q&A yesterday with the inside bar break. So always good to get some practical application for that. So if we go down, again, Cody's looking for 124.80. I like that level, Cody. I would also like that level once again for a buy. And I'm sure you're the same way, right? He just said once it gets down here, then he would look to buy it back up. So a true mercenary in the market, a disgrace to all of us. He's not fighting for any side in particular, only fighting for himself to secure financial freedom for him and his family at the regards of everyone else. Trading. Let's get on to a 15-minute chart. Again, nice movement here on pound dollar. Let's go to a 15er. And then we'll get a nice view on the range bar chart as well. So here's a 15er. Now, if you're looking for a more conservative short to the downside, right? Look for this shelf to be taken out. If we can take out this shelf, that's going to be even better proof. I would say that we're likely to continue down here. That shelf where I just drew this line out. You can see that a little bit more clearly on a range bar chart as well. So you see the range bar chart, you can see price action flowed up, ebbed down, did a little consolidative dance, right? A little distribution. If we can take out these lows, these are the last lows, right? You guys see nothing else in this area until our VS1 level. Nothing else in that area until the VS1 level, right? So if we can take out those lows, that's another way to get involved. And of course, multiple ways to get involved. And that's the main thing we want to talk about, right? There's so many different ways. I hate the term skin a cat because I don't know where that came from. It sounds horrible. But there's so many ways to get involved as a trader. And once again, referring to yesterday's Q&A session, we spoke about meshing things to your personality and how that's important from a sanity perspective. Because if you're driving yourself insane, you can't effectively trade the markets. You got to find a way that works well for you. If you're an aggressive trader, you're like, man, yeah, let's just put some sell stops on there and boom, I'm in it during the breakout. Like, that's fine. Not everyone is that aggressive. Like, I am not that aggressive, right? So you can opt for a more conservative way. You can opt for, hey, I'll be aggressive at only a more conservative point, or hey, I'll wait for that and I'll wait for like a pullback first, right? There's endless ways to do it. The main thing is that you know what you're doing, and then that you're able to consistently do it when the time comes in the market. So a few other ways to handle the pound here as well, looking at shorts. So good setup there. Any questions about the cable? Let's go back. Let's just take a quick look back at pound dollar, see how that short is working out. Again, we had that inside bar break or fake break. We broke back down to the downside. We saw in the range bar chart that we're working down. I don't know if we had that same level of structure ID'd on our 15 or not. I forgot. If we did, you see lower low, lower close. So again, if you are someone that's currently trading this as a breakout, we spoke about originally that stop loss being up higher, right? Above this zone, 25.51s, right? So here's the question for you right now, right? Our stop loss is put at a location where what? Who can answer that question? Where is our stop loss put at? Our stop loss is put at a location where the market tells us we're wrong, right? We're getting involved right here. We know we're wrong right here. Price has broken and closed below a previous level of structure. And this is why technical analysis is so important. You know how to understand this stuff, not just for like trade reasons, but for just general analysis. We just broken and closed above a level or below a level that told us that we are right. Now, we may not be right in the full projection, right? We may not be right in that price rolls all the way down to 24.80s for profits or 25 even for profits, but at least we're right in our initial directional move that price is moving short. So the next question is, do we need our stop loss to remain this high to know that we're wrong? Now, if the answer is yes, you leave it there. If the answer is no, and it's where trade management comes in, and trade management is so key in what I like to call the next level of trading. You get to a point in your trading where you don't necessarily become better at picking more winners, so your win percentage doesn't really change. What changes is you get a little bit better in managing your losses, whether it's active trade management or whether it's just getting better in placing stop losses, and you get better in your precision with target profits. So picking the right location. Sometimes that means being able to shoot for more. Sometimes that means being able to shoot for less, but getting a little bit more accurate. There's different ways. But it's those outside levels of trading that start to impact your trading the most as you gain more experience, because your signals and your setups don't really change too much. So this would be an example of, hey, price has told me that I'm right in my directional prediction. I don't necessarily need to be this high for me to be wrong. So this is where you start reducing it to break even or right above whatever your stop loss method is, but you're reducing risk on the back end. That way, if you lose, maybe a loss is just a scratch trade, a break even trade. Maybe a loss is a win where you can technically lose but still win, which I guess would be a win, but you get what I'm saying. Or if you do take a loss, you take a lesser loss than what you would have. And that's how you continue to grow your account. When you can keep your losses small or minimize your losses, that way your wins make up for them plus more, and your losses don't begin to take less away from your wins. So that is the next level of trading. If you're new, don't worry about that stuff yet. You're just worried about kind of the basics, but I'm telling you from personal experience, once you get to the point where you know yourself as a trader, you know your signals, you know what you're looking for. You hate to say it, but you've accepted the fact that, like, hey, I'm going to win this percentage of the time. Like, I've accepted the fact that I'm a 45 to 55% trader, right? That is what I am. I'm not going to be a 70% trader. The numbers just don't show that for me. So I have no kind of, if it happens, it'd be great, but I have no expectation of that. So I can't control that, right? Control what you can control. I can't control that aspect of it, right? What I can control, and when I say I can't control it, it can shift a little bit, don't get me wrong, as you get better, but you're not going to make drastic shifts, right? You are what you are. But what you can get better at is the other stuff. That's what you can get better at. So, all right, let's take our first break. Who just came in? Core retail sales came out. We had some Canadian news as well. We can see the markets are moving. You can see the pound dollar, right? We spoke about the little bit of the secondary trading opportunity here, waiting for a retest and a continued rally down. We came down to that 125 level, which is the first level we had on the radar. Second level to 124.80s. Again, this is where a range bar comes in handy because you're not going to be able to see too much opportunity here. You see kind of a spike, but you go down to a range bar chart, and boom. What do we have here on the range bar chart? We have price action spiking up. We have our nice little 3-bar reversal, and then price comes down again, and then again your secondary opportunity would be on any type of retracement till we get to our ultimate destination. So we spoke about this a little bit last week when we had range bars. One of the things I like about them is that it gives you not only an alternative look on the market, but it can provide you different and alternative opportunities as well, as it's pure kind of movement based and not just time based. So really good idea there with the pound today. Let's continue on. We left that dollar again, so we're in dollar Canada. Let's go right to the belly of the beast since we had Canadian news come out.